Hey folks, welcome back to the channel. This is Jason. How are things going today? I hope you guys had a good weekend. That's me in the corner there on the left-hand side of the screen, really tiny, so you guys don't have to look at my face today. Anyway, wanted to start today off by talking about how well the market has really done in the last 4 or 5 days. Even though I remain in the immediate term quite a bit more pessimistic about the markets and the economy in general than I have been, even though we're seeing a spate of good news come out right now. I just was reading a report kind of predicting that supply chains are going to look pretty good with the new inflation data that's coming out, and inflation is going to show some improvement as well. Of course, I really hope that's true, and I think that is mostly due to, of course, decreasing energy prices. I guess the big news and what is probably affecting the stock market more than we think it is Ukraine actually being successful with their counteroffensive. Now, I stated on several live streams before that I wasn't sure what was going to happen with this Ukraine counteroffensive. That most expert predictions, and I'm talking about real expert predictions, have been incorrect when it comes to the Ukraine conflict, and that the progress that was made with this counteroffensive actually caught all of the experts by surprise as well. And I think some of the ancillary effect or benefit of that has really been an increase in the stock market over the last 4 or 5 days. I don't know if people are directly making that connection between successful Ukrainian offensive and improving supply chains, improving prospects for harvest out of Ukraine, or if it's just a general feeling of optimism that has buoyed the market a little bit in the last 4 or 5 days. I'm not going to get too excited about it. I really hope this sticks. I do not want to go through a bear market. I do not want to go through a recession, but I am preparing for one. I think it's always worth it to be prepared for what's coming next. So, did have a few questions in the last live stream that I would like to talk about. And Nelly, I do think that you did ask this in a live stream. It was just at the very end of it, and I didn't get around to answering it before I actually ended the live stream. So, with the US nationalizing chip makers, that creates a void to be filled by Chinese chip designers like Alibaba and Baidu. Correct. Thoughts? So the US is not nationalizing chip makers. The CHIPS Act really provides a system of incentives for existing US chip makers to bring some of their chip manufacturing back to the United States. It also, interestingly enough, provides incentive for Taiwanese chip manufacturing companies to build manufacturing facilities here. So TSMC already had on, and they're already constructing a giant facility in Arizona right now. And in fact, I know someone who is probably moving from Taiwan to Arizona in order to be a part of this. So it's not just the U.S. manufacturers being encouraged to reshore some of their operations. It would make sense for these Taiwanese companies that are really multinational companies to have some geographical diversity in their own business operations in case there is conflict with mainland China at some point, that all of their operations aren't disrupted. If you look at their, and we have a long history of multinational companies that are like this, like the Dutch East Indies Company, the British West Indies Company, all of those things, all of those companies in the past. These were multinational corporations that were able to suffer the loss of one arm of production or trading facilities because they had so much geographical diversification. So that idea of having a company that is a true multinational that can survive geopolitical uncertainty, that idea has kind of lost favor in the last 30 or 40 years with the end of the Cold War. And I think to a degree because of the attempted repolarization of the world on a geopolitical scale with China and Russia attempting to make this a multipolar world. I think that type of business arrangement is coming back in fashion. And I think the United States has actually encouraged that by encouraging some of these Taiwanese companies to open up chip manufacturing facilities here in the US. Now, are Alibaba and Baidu the biggest chip designers out there? I would say no, because they're not necessarily busting out new technologies, new groundbreaking technologies for anything other than their own products, right? These aren't, this isn't an Intel, this isn't, NVIDIA or other companies like that. I did provide a link to a bunch of semiconductor manufacturing companies in China. There are actually far more semiconductor designer companies in China as well that I didn't have time to find a list for. But now, nationalizing is a very specific word, meaning that the U.S. would be the government or the people would actually be taking ownership over that resource, and that is not something that we're doing. We very, very rarely nationalize things, and usually nationalize production of things for using the Defense National. I think the Defense National Production Act. That's our method of nationalization, and it's usually not permanent. It's not like Venezuela nationalizing all oil production in Venezuela and thereby basically seizing the assets of American oil companies that existed at the time after they had invested billions and billions of dollars in there, which, by the way, we were never compensated for. I'm not sure that justifies sanctions on our part, especially now that it's been so long. I'm not sure that those really help in the long run. So happy to open up the questions today, since today is kind of a today's kind of a day where I didn't do a ton of research before I jumped on today. Just looked up a few articles that I was interested in. I'm really happy to answer any of your questions today, as I don't have as much to talk about, largely because I was distracted by a lot of the things going on in Ukraine, and really distracted by how stunningly successful the Ukrainians have been, and really really stunned by the reaction on pro-Russian media, especially on Telegram, how they're finally reacting to reality here. So could we call it U.S. Western protectionism? Absolutely, we could call it U.S. Western protectionism. So the United States industry, especially heavy industry in the United States, has essentially not existed without protectionism since the 1970s, and really since the 1980s, since we first started trading with Southeast Asia and with China. And largely that's because of we want to have those defense capabilities. Like we want to have a healthy auto market so those people can turn around and produce war material if we need to. And now that chips have become such an integral part of defense technologies, it only makes sense that we extend some of the protectionism to chips. So yes, let me see here. Neo had a good run today. I didn't actually take a look at Neo. Everything had a good run today, pretty much, which, since I sold a bunch of puts last week, like I talked about, that's actually a good thing. Now those have all declined in value, and I can buy them back for a lot less. Oh, Neo did really have a good run today, which means that I may actually be exiting Neo pretty soon. I sold some 24 puts on Neo. And I know 24 calls rather on Neo going out there. I think we have talked about this before, that I'm looking to exit my Neo position and concentrate on XPeng for a variety of different reasons. And a lot of that was before the so-called agreement for to keep companies in China compliant with our accounting standards here and our reporting standards here. A lot of that was before that. I haven't changed my mind just because an agreement has been signed. I think that we're all going to be paying the price for geopolitical uncertainty for a while, and I want to limit my exposure to China to a degree. It's true that you guys have constantly made the comments that companies like Alibaba and Baidu are unfairly undervalued simply because they are in China, and that is absolutely true. Sorry, guys, got a phone call here from an insurance company that I actually do need to answer at some point, but I'm going to do that after I get off my live stream here. Anyway, yeah. Hi, Jason. How do you see the rental market in the U.S.? How is the energy crisis in Europe, and how will it affect stocks? So we did talk about the energy crisis in Europe and about what it would take for the United States to supply, and not just the United States, but the entire world, to supply liquid natural gas to Europe. Now, they have the capacity to receive as much liquid natural gas as they need through the ports that already exist and the ones that are under construction. But the whole world does not have the capacity to divert enough of the liquid natural gas fleet to supply Europe this winter. It is going to be a cold winter in Europe. However, roughly 38% of the orders that exist right now on the books for liquid natural gas carriers represent about 38% of the fleet that's already existing, meaning that if those carriers were all going to be completed next year, the fleet would increase by about 38%. And I don't know for a fact. I did the math in the last one that it would take about 137 out of the 741 ships worldwide to be and all of the QMAX carriers, liquid natural gas carriers, to be diverted to Europe in order to supply all of Europe's needs. That is unrealistic. All of those ships are busy at this point. But if that 38% increase in the fleet comes online in the next 2 years, that has pretty much solved Europe's energy crisis in terms, at least in the short term, in terms of liquid natural gas supplies. The formula there is basically 609 meters of vapor for every 1 meter of liquid natural gas. So, a ship that carries 150,000 cubic meters of liquid natural gas provides a lot of energy to the grid in Europe. In the next 2 years, I think that in the next 2 years, there will be zero need for Russian gas whatsoever. Right now, they cannot, because they don't have access to hard currency at this point, they cannot cut off, as much as they want to use liquid natural gas as a weapon against the West, they can't do it, as it's going to starve them completely of what they need in order to fund their war efforts and to fund their government. So they still have to sell the West some liquid or natural gas. They're using it as a weapon. But in the next 2 years, I think that even if Putin were deposed today, I think that in the next 2 years, Europe would have no need for Russian natural gas. They would be able to receive all of it from a well-functioning and brand new fleet of liquid natural gas carriers. And they're going to have, I think they have, 26? No, it was 18 different large facilities for receiving liquid natural gas in the EU. That's not counting the 4 that are in Turkey, and that's not counting the 6 smaller ones that exist in the EU as well. Essentially, the capacity of those, when I penciled out how many voyages each ship would make, each one of those ports would literally right now need to receive a liquid natural gas shipment, one shipment every 3.66 days. They totally have the ability to receive this. That's not in question. It's the ships to get it there is in question. So that's how I see the energy crisis in Europe. I do think that liquid natural gas producers are going to do very, very well in the next 2 years. The harder thing to capture here is the shipping aspect of it. Somebody said, hey, maybe I should be investing in Maersk. I'm not sure how deeply Maersk is involved in liquid natural gas shipping. And here's kind of the other issue. We have a labor issue when it comes to the merchant marine fleet. Merchant marine academies are not turning out qualified officers fast enough. So that's another issue. And that's one that I don't have a good grasp on, and I don't know how that's going to affect shipping in the future. Now, the rental market, very interesting that you should ask about the rental market, because there's a couple things that are happening right now. One of the things I wanted to cover today is how student debt relief could be a boost to the housing market, and a couple of weird things that are going on with the housing market right now in terms of institutional home ownership. I think this makes total sense. We all know people with 10, 20, 30, 40, $50,000 in student debt. Everyone knows someone with student debt. And that student debt usually comes with rather onerous interest payments and a rather onerous payment schedule. And it is literally preventing millions of people from qualifying to buy a home. We don't see the housing market quite in free fall right now, but the signs are there. And let's be clear, prices are going to decline. That is not a prediction. That is not I'm not looking into a crystal ball. That is not something that might happen. That is a guarantee. Why is that a guarantee? It's just related to math. Put it to you this way. If you could get a loan earlier in this year at 3% on a 30-year basis, and now you can get it at close to 6% on a 30-year basis, the interest that you pay on that loan is essentially doubled. For every $100,000, you're paying an extra $3,000 annually to borrow money. That is going to reduce the affordability of homes to a large slice of the population, a giant slice of the population. Student debt relief may allow some of those borrowers now to actually qualify for more home or to qualify for a home at all. But it's not going to save the housing market from some significant declines, especially when you see what else is going on in the housing market here. And I did want to take a look at that real fast because it's the housing market and the health of the housing market actually affects everything. It affects everything. So this is one of the things that I wanted to talk about here. Institutional investors have bought hundreds of thousands of homes, many in Black communities, and critics say it's creating a generation of renters. So Democratic lawmakers are scrutinizing whether the American dream of a suburban home and a white picket fence is being seized upon by large institutional investors, costing working people a shot at property ownership. And I'm going to say right now, it is a large contributing factor to the run up in prices in 2021. And we're going to talk about how I know that that is true. Okay. Basically, this is just talking about how they're talking about this in Congress, that corporate ownership of single family rental homes comprise actually about a third of the nation's rental housing stock. That has risen significantly since the 2008 financial crisis. It's not the same thing as, your buddy has an LLC and has one rental property in there. We're talking about the Goldman Sachs, the TD Ameritrades, and these people owning huge portfolios of hundreds or thousands of or hundreds of thousands of homes. Now, I fully expect at some point those are going to be securitized, meaning they're going to be turned into real estate investment trusts. And I really see that this is going to bye, Jason. Got to run. Bike, actually, but I'll catch you there. All right, Bram, we'll talk to you later. So in this case, this is the fastest increase in corporate ownership in 16 years. And let's talk about how bad it is. In the Atlanta metro area, 42.8% of for sale homes went to institutional investors in the third quarter of 2021, while investors purchased 38.8% of homes in the Phoenix, Glendale, Scottsdale area during the same time period. That's actually a really large area. After an extensive investigation in this practice, we found that private equity companies have bought up hundreds of thousands of single-family homes and placed them on the rental market. This removes them from the housing market, or from a housing market that might otherwise have been purchased by individual home owners. These corporate buyers have tended to target lower-priced starter homes requiring limited renovation. These homes would likely have been bought by first-time buyers with low to middle income buyers, or both. The homes, Green said, are often located in communities with higher than average populations of people of color. For example, the average population of 5 large investors' top 20 zip codes is about 40% Black, although Black people comprise just 13.4% of the overall population in the United States. Certainly concerning, and certainly possibly creating a generation of renters, which I personally, as someone who runs a business that is kind of dependent on people being financially well off, I do note that even at my jiu-jitsu academy, I don't have that many renters who are members at my jiu-jitsu academy. Most of them are actually homeowners because they've reached a level of financial stability and they're able to do that. So this is just kind of further illustrates the problem. This is an article that comes a little bit later from August 31st, 2022. Institutions are set to own 40% of single-family rental homes. How can you get your share? So real estate, though, this article does point out, is experiencing transformation as people work from home and sought to escape metropolitan areas. Dramatic change in ownership as institutions funded $2.5 billion of single family rental acquisitions in 2021. They committed more than $60 billion in capital to buy those single family rental homes in the past year. So Yardi Matrix estimates that by the close of this decade, institutions will own over 40% of the single family rental units in the United States. One of the big problems is with this whole strategy is, if you have ever been with a rental management company or have worked with a corporate rental manager, they literally make zero exceptions to that 3 times earnings rule, to the deposit rules, any of that stuff. And I don't know if you guys have ever been a little bit behind the 8 ball in terms of your finances, or a little bit stretched But guys, this is how people end up homeless: is they enter into a housing market where there isn't any flexibility to make some exceptions. Especially when I first moved out here to San Diego, I was a lot younger. I had a bad roommate situation where I got ripped off for some money. Hey, Stephen Lovato, haven't seen you in 20 years. Anyway, I kind of let that go and moved out. But at that point, I wasn't making more than 3 times rent anywhere or anything like that. I essentially had to find a landlord who was willing to make an exception. And back then, most single family rental homes and even most condos were owned by individuals and not by corporations. And I was able to convince them to make an exception and then make good on the promises that I made them. With 40% of single family rentals rental units being corporate owned in the United States, there aren't going to be that many opportunities to do that. And I think that really sort of increases the likelihood that in high housing cost markets, we're going to see an increase in homelessness. Now, the United States is seeing an increase in homelessness all over right now, and that is largely because of how expensive housing has become. This doesn't help, folks. This absolutely doesn't help. So, no, not very excited about this news. Yeah. So, other news that I want to talk about here, and that's very good, is, of course, falling gas prices are raising hopes that inflation is slowing, the New York Fed survey shows. So it's not just falling fuel prices. And I think that is the only thing that has really caused the slowdown in inflation so far, is falling gas prices. Hopefully this week, we're going to see some indications that supply chains are actually improving. Fuel prices are very important, but it's the supply chain disruption that has caused all of the inflation that we see now. We have too much demand, not enough stuff, and we don't have the ability to get the stuff where it needs to be when it needs to be there. Some encouraging signs, though. We've seen freight costs decline over the last 3 or 4 months. We've seen fuel decline ever since about June. I'm still looking at buying an electric vehicle. By the way, I think I talked to you guys last time. I was thinking about buying that Ford Lightning. My wife was really against that idea, but I'm going to work on her and get her convinced of doing that. It just fits a number of different roles we need for our family. But anyway, along the lines, consumers now expect gas prices to be little changed a year from now. Although they are seeing food rising about 5.8%, that's actually not a terrible thing, right? That consumers now, they're not expecting gas prices to go back down to 2020 levels. There's not going to be any sort of disappointment here. What we're seeing is consumers expect gas prices to be little changed a year from now. I actually think that in the spring, we'll probably see gas prices a little bit higher than they are now, largely because I see that there's probably going to be a second offensive in Ukraine, and Russia might respond by limiting their oil sales as well. We don't know what's going to happen with that. So Russian oil right now is still hitting the global markets. It's just not doing it directly through selling it through the West. It's going through China and through India. I could see that with a spring offensive by either the Ukrainians or the Russians, and there will be a spring offensive with the Ukrainians or Russians, we might actually see something different happening. So by February, well, I guess it's spring in where I'm from, but it's winter in Ukraine. I think that we'll probably see a February, March offensive by either the Ukraine or Russia. Although I've been wrong, just like all the experts have been wrong on that. Anyway, quick news today. I was doing family stuff today and working on another video about using different financial ratios to value stocks and how to compare different stocks in different industries. I was working on that today rather than following the news like I normally do. The last thing I wanted to mention just briefly, and I don't want to get too in depth in this, is that the Ethereum merge is upon us now. Ethereum 2.0 is going to be a reality in just a couple of days. So I don't know if you are Ethereum holders. I am very excited about this. Ethereum blockchain is almost immediately going to be faster, more scalable, and 99.2% more energy efficient. As this article says, in theory, it should be wonderful for Ethereum, the network, and the asset. But who knows what the price of Ethereum is actually going to do? It doesn't matter that it is now more efficient. It doesn't matter that it's more scalable. It doesn't matter that it's faster. It doesn't. None of that says anything about tokenomics. It doesn't mean that the asset is actually going to be higher once all this is done. And this article says we don't know whether it's already baked in and doesn't budge. I don't think it's baked in. I think that we're going to have to see how much of the financial world actually gets transferred onto DeFi after this using Ethereum's blockchain, and it's going to take a while to know how that is going to react. So I hold some Ethereum, of course, not very much. It's literally like 3 coins, or it's like 3 Ethereum or something like that. That's all I have, which is not going to make me rich no matter how much it moons. But I am very interested in the world of cryptocurrency and DeFi. If I never had very much invested in Bitcoin or Ethereum or any blockchain tokens. So I didn't lose so much when it crashed. However, in a lot of ways, this is a good thing. We're going to get to see right now in this crypto winter how well these blockchains work as they were advertised, not just how high the tokens can go. And I think that is extremely important. Another thing that's extremely important is a lot of the criticism from folks on the greener side of things, targeting how much energy blockchain actually uses. A lot of that's going to go away, and I'm very, very happy about that. So like Bitcoin right now is estimated to account for 60 to 70% of total global crypto asset electricity usage, and Ethereum was estimated to account for 20 to 39%. That is going to basically drop to about zero. So there's been growing calls for proof of work blockchains to adopt some less energy intensive consensus mechanisms. And the most prominent reaction has been Ethereum's promise of a launched Ethereum 2.0, which uses proof of stake consensus mechanisms. So I think that's very, very important. What that says about the value of Ethereum going forward, we will have to see. Anyway, today is going to be a rather short live stream, guys. Like I said, I'm a little bit less prepared than I normally am, and you guys are not putting out a lot of questions. I'm going to stay on for just a few minutes more to see if you guys have some questions about any of your favorite stocks, or about any of your favorite anything. But let me know. I'm going to take a sip of my coffee here and wait just a second. All righty. Let's see where the markets actually ended up too. So everything was pretty much up today. Railroad strike wouldn't be an economic black swan, says Goldman Sachs chief economist. I'm almost scared to open that article. Do you know how much? A vast majority of what we ship in the United States in terms of tonnage is shipped by truck. But a vast majority of really important things is shipped by rail, especially high weight items that are shipped by rail. So I'm actually really surprised that someone would say this, especially things where we aren't, things that come off of container ships where they're loaded directly onto freighters and they're moved inland where they're not, the containers aren't unloaded on the spot and reloaded onto a semi truck or something like that. So, question about Tesla. Do you think it'll come down again to the 220 range? I think that's certainly a possibility. So I sold some puts on Tesla out at like 180, but like I think I sold it about 3 weeks ago. 3 weeks ago, it was like 180 put, expires on in November, and based on the price, it looks like the market thought that it was a likelihood that it may even hit the $180 range at some point. But remember, there's a lot more market pessimism at that point. And right now, the market is a little bit more positive. I'm not. I'm still selling puts in the 180 to 200 range, but my time frame is out there pretty far at this point. So I was able to reduce the amount of leverage that I was using in my accounts to basically to very, very little. And right now I've got a target range for where I'd like to acquire Tesla. And anytime it gets into that $200 range, I'd like to buy more. I'm still buying 1 or 2 shares here and there because I want to get to another like 100 share block. But if it drops down to around $20 a share, I want to buy like another 100 shares pretty much as soon as I can. So yeah, I'd love to do that. But will it come down to the 220 range again? based on the history of this stock, I would say almost certainly, just because it is a highly, highly volatile stock. So yeah. Radshaw says, you said in the past you think the impact of so I haven't looked as closely at AMD as I have with Nvidia, and the reason Nvidia already had most of their China business in terms of some of their high-end AI stuff sucked out of their business. They lost about $400 million of shares. I'm sorry, of revenues beginning about in the June timeframe. And that really had to do with more with like the business environment and a lot less to do with the ban, because it happened pre-ban. So right now you're banning business that isn't occurring because the Chinese weren't buying. And they weren't buying because of business, just because of the business environment. I think, does it apply to MD or AMD? I don't know the extent to which AMD was selling the type of technologies that are going to be limited. Meaning, there's going to be different licensing agreements when it comes to AMD for some of this stuff, but I don't know the extent of that right now, so I really can't answer that question. So sorry. Yeah, I'm not going to pretend like I know the answer to that. So I would have to take a look. But in terms of Nvidia, the only reason I was saying that is because that business was already gone. And they mentioned that in their quarterly phone call, is that there was about $400 million of business missing. Not missing. It's just they weren't doing it because of all the shutdowns and economic uncertainty in China right now. That business had dried up. So, did you buy more XPeng? Actually, I did not buy more XPeng. I don't want to buy more XPeng, just because it already is a large part of my portfolio. I'm looking to dispose of some of my NEO, like I said, to limit geopolitical risk at this point. And the fact that, I'm still 10x on my NEO at this point, especially now that it's back to $22 a share. I'm over 10x at this point. I'm ready to dispose of it. It's going to be one of the shorter held 10 baggers that I've ever had in my entire life. Most of the time I bought a stock like that. This took what 4 years? Like 2019, 20, 21, 22, right about 4 years for me to make good on 10x. Most of the time it's taking like 7 to 10 years to do that. Yeah. Regarding a car, I have a Cybertruck on order, but since they delayed the release of that truck, I got a Model Y until the Cybertruck available. That's just me. I understand that. So I need something that can tow a boat, but I was looking to pay around the $40,000 range for that, and the Ford Lightning might fit that bill for me. I'm also originally a Texan, so driving a truck for me is not entirely out of character. The Model Y, I love the Model Y. I'd like to do it, but the cheapest one that I've been able to find that's going to do what I needed to do is roughly $70,000. So I don't actually need tremendous amounts of range. I'm not generally driving more than about 100 miles in a day, and I'm not towing my boat more than about 30 or 40 miles in any one direction. So I don't need a ton of range. What I do need is the ability to tow at least 3,500 pounds, probably 5,000 pounds. I'm thinking I'm going to start building another boat here pretty soon that's going to end up being right around 3,500 pounds when I'm done. So, but that's just an estimate. I haven't actually calculated out the amount of epoxy that I'm going to need. But yeah, but the delay of the Cybertruck really kind of pissed me off, man. Got to be honest with you that we're basically 2 years behind right now. And this is something that has happened over and over with Tesla. We should never expect them to stick by their timelines or anything like that. But yeah, I might end up going with the Ford Lightning because of that. And I think this is a huge, huge mistake on the part of Tesla. They are having to compete with the Ford F-150, which is the best-selling vehicle in the United States for like 40 years running, zero competition. And you just allowed Ford, who already has a lock on that market, to introduce the idea of an electric truck to the base where they already have loyalty. So yeah. So I was waiting for it, and the delay wasn't fun. And honestly, like, it does everything that I needed to do. It has the range that I would want it to have in almost any vehicle. The only thing I was going to have to do is convince my wife to buy it because it's ugly. But the ugliness is one of the reasons why it's so cheap. because you don't have to all of those flat panels mean that they don't have to be run through a press. And I really love the idea of it. I love the steel color. I love everything about the Cybertruck. Maybe not the shape so much, but the delays are what killed it for me. There's going to be adequate products. The consumer, the market is consumer driven at this point, right? Demand is not going to go away for EVs. Demand is self-sustaining at this point. I kind of agree with that. I can't remember the guy on the All In podcast that I really didn't like that much. I do agree with them on this point, is that the subsidies to a degree are unnecessary. That the adoption of EVs at this point is going to be consumer driven. And it started out here on the West Coast. And when I tell you guys, every day I see more EVs, different types of EVs. I just drove by basically a sidewalk that had been redone, like a residential sidewalk that had been redone in somewhere here close to my house, where now there were like two houses right next to each other that were both using. They both built their own charging stations so they could park on the street and charge over the sidewalk. And I stopped and asked the guys, and they're like, "Yeah, we did this because we have electric cars and we want to fill our garage with crap. So we're going to park our cars on the street. And we just have a charging station, and they can actually charge for it now too." So they set up chargers outside of their own house. They got permits from the city to do it, or from the county rather, to do it. And mostly they're charging their own cars, but whenever they're not there, one of their neighbors like hooks up their cars and charges there too. So I thought it was very interesting that they were doing that. So I do tend to agree with David Sachs that the subsidies are not necessary because it will be market driven, but it is going to help accelerate that change. Not sure at this point, though, the acceleration is not going to be really helpful either because of the supply chain issues that we're having with lithium at this point. And we need to speed up the permitting process for lithium mining and refining here in the U.S. We need to be exploring options to do that in very friendly, business-friendly South America at this point, which Chile is one of the largest suppliers on the planet. They're extremely business-friendly. Most of their economy is run by what they call the Chicago Boys there, which are a bunch of graduates from the University of Chicago, their economic school there. Yeah. But no, I do tend to agree that I am going to enjoy the crap out of my subsidy when I claim it. But I don't believe that is actually necessary at this point. The average cost of a vehicle period in the United States is right around $47,000. And you have many entry-level EVs now under the $40,000 or close to or under the $40,000 mark. In fact, I ran the online tool for what the Ford F-150 Lightning was going to cost me, and it was like $43,000 out the door for their base model with no frills. So I thought that was pretty interesting. So I'm not gonna. There's a lot of fees that I'm just not gonna friggin' pay for now. I haven't bought a new car in forever. This is not what I do. So this would be the first new car that I probably bought in a decade. And actually, the last new car that I bought was the only new car I've ever owned. So that was. Other than that, I've always bought used cars that are like 2 years old used. I'll let some other sucker pay that 30% first year depreciation. Although the market's been upside down for the last couple of years, it's actually made more sense since 2020 to buy a new car for certain models than it has been a used car. But for most of my life, I would just let some other sucker pay that 25 to 30% depreciation. So do I see car prices coming down anytime soon? Do you mean used cars or new cars? The used car market has already crashed. I know a couple people who flip cars for fun, and they're stuck with inventory at this point. They're looking at taking a loss in order to get liquid again. Do I see new car prices coming down anytime soon? Probably not. The only company that really has a history of passing on savings to the consumer is actually Tesla. Everyone else has the habit of once prices raise, they never come down again unless it's like a Memorial Day weekend sale or something like that. So I don't actually see new car prices coming down. Tesla, though, if we see some sort of rapid improvement, I may see that. So, yeah. Did you see Texas application to start processing lithium tests with projection to start? So production. So here's the thing. They're going to get statewide. they're going to get statewide approval on that pretty quickly because there's a lot of areas essentially of Texas that have virtually no zoning whatsoever. And yeah, I know. Yes, dealers are charging a premium. You mean the premium over MSRP? Do you see that coming? Do I see that coming down? Yes, I do. I see that coming down with a improvement in supply chains, but I don't see MSRP on anything coming down other than Tesla. Okay, so back to your question, Radshaw. I saw Tesla's application start processing lithium in Texas, which makes sense because that's where their 4680 factory is right now. And or the new one is for the Model Y, and production will start at the end of 2024. That I highly doubt. And that's because the state process, they might go through fairly quickly. But the federal process to get approval is right now taking anywhere from 2 to 8 years, depending on where the project is. And I can tell you that based on experience and the fact that I used to live in Texas, Texas is an extremely litigious state. You can expect whatever this is to be tied up in lawsuits for a number of years. It's going to add cost to the project, and it's most important. It's going to create. It's going to take a lot of time. So I think that we should always doubt Tesla's. We shouldn't doubt that they're going to do something. They do deliver on their promises. Tesla consistently delivers on their promises. They just do it years after they say they're going to do it. That is the issue with Tesla, is we can't hold them to a timeline. So I think that we could expect that every state level permit would be approved by the end of 2024. But I don't believe that those federal permits will be approved by that time period. That's kind of my issue. But okay, so it has been 41 minutes. I am going to call this one today, guys. Thank you for your questions. I'm going to cover a little bit more EV news. I'll be back for sure on Thursday. Absolutely for sure on Thursday. Will not be back tomorrow on Tuesday, and I may be back on Wednesday, but for sure I'll be back on Thursday. I'm probably going to have a guest, and we'll be taking a lot of general questions on the economy, obscure questions on the bond market and how that is giving us very different signals than the stock market is right now. And yeah, we'll be happy to take any of your questions and stay on as long as you like. And it'll be my buddy Lauren Bailey from Client First Capital. And we'll see you on Thursday at the latest, maybe a little bit earlier. All right. Thank you so much, guys. Have a nice day.